Welcome back to the channel. So we are going to get into another backtesting session. So if you recall, we were looking at CPI Thursday. Nothing really came about from the day. The market, as you can see, is bouncing between two PD arrays, and therefore represents low probability conditions. So ultimately we didn't do anything within there. CPI is given the indication that it wants to reprice higher. So we are going to have a look at Friday. We're going to trade into Friday. Now Friday is not a day that I would typically engage the market, or certainly I tend not to within live markets, but for the purpose of this we'll have a look at Friday, see what represents in the market. And typically I go into Friday with a view of low-hanging fruit objectives, take what you can get and get out, that sort of approach to Friday. It can be one of those days because it's the end of the weekly range. Typically, more often than not, that expansion phase for the week has occurred. So Friday can be the retracement back into the range, can be, but also at the same time, if that has pretty much occurred, Friday can be a real low probability day. So let's see what we ascertain from Friday. It's going to pop out to the daily. As you can see, we had this inside bar candle across all three members. Okay, so so that in itself highlighted the low probability trade conditions that I was referencing for the previous day. So nothing major has changed on the daily time frame, so we're not going to spend too much time here. But we're just going to drop down to the 4 hour. Let's see what we've got. Okay. So first things first, let's see if we can. That could be interesting. I think before I mark up any further, what I'm going to do is just that's fine. What I'm going to do is let's just move time forward. Because we could end up there we go. Wow. What happened during the London session? Wow. Okay. Alright, so let's just go back to the daily. We've traded up into here, which in itself could represent something. And get rid of. We're not going to do that just yet. Let's just update things on the H4, and then we'll sort of move. So no clear high. Yeah, no clear high. So there's a start here. No clear high. So we're going to get rid of these points. Okay, so that's fine. Okay, so let's go back out to the daily. We can see that price has traded up into this fair value gap. So I want to monitor. Now I don't have an unconfirmed, so I'm just going to have to use this for the time being. But this is just purely for reference. It's not guaranteed in any way. Drop down to the 4 hour. Okay, so we've got the previous day's low marked up, so let's reference that. So we certainly found support from here in the end. Okay. Right. So let's take this out. Not really a fat lot else to add. So as I said, this is temporary. It's not it's, you know, okay. So let's get into our analysis. Okay. So let's start with our usual institutional order flow. So again, from a daily perspective, this has not changed in my opinion. It's still bearish. However, we're now getting to an inflection point where we'll be able to determine whether that is still the case. The 4 hour, however, is bullish. So we'll need to see, if we're going to go lower, we'll need to see signs of that. So I'm going to maintain the same analysis that we took yesterday. I'm going to provide more concrete narrative in terms of the 4 hour. So currently the H4 time frame is bullish. I have noted how the market found support at the bullish fair value gap, and the market repriced higher. Where a lot of this has occurred during the London session. Okay. So it's important just to note that the daily is bearish, but the 4 hour It's currently bullish. So we will need to see evidence to support lower prices, or likewise, alternatively, we'll need to see evidence to support further bullish price action. Okay. So ERL / IRL. So again, I didn't note high time frame, cracking correlation, any of that nature. So I am currently awaiting an high time frame, cracking correlation to before determining where the next ERL or IRL draw would likely be. And that's fair, because we haven't had anything. I don't want to be in a position where we're just guessing. Once I have that high time frame cracking correlation, I'll be able to determine more explicitly where I believe price is going. Okay, so SP, I have noted the clean and clear swing point below the marketplace, referencing the previous day's low, and also where near-term liquidity would reside. This would also be the key price level where we could see high probability longs. Okay. Excuse me. Now, we do have clean and clear swing points at the highs referencing a previous day's high, so that is important to note. Okay. TOs, so currently no change here with all markets being above, and that supports the idea of high probability shorts. Doesn't necessarily mean that that's what's going to happen, but it certainly means that there's a strong possibility that if we see a move lower, we could see price expand in that direction. So crank correlation, this hasn't changed. There's currently none. In my opinion, there isn't any. However, there is an unconfirmed high time frame SMT at the highs that, if confirmed, could support a move lower. But we would need to see the confirmation of that. And game plan, we'll wait on that for a second. I want to drop down to the hourly and have a look at what we have. So that's, I want to say that that's London, but that's just a so we'll just, well, let's take that out for now. Go back to the 4 hour. So we certainly want to make a note of that. bugger. Oh my lord. What the? Okay. Okay. So we've got that now. I'm going to mark that up. Why am I marking that up? Because it's a key liquidity pool. Okay, so now we can go back to the hourly. Yes, we have hourly. So that's the London low here. Excuse me. Do you want to copy that? And we've got the AR low here as well. So we've got two key lows in close proximity. And to be fair, I will mark them both up. Could be significant. Yeah, kind of one in the same, but nonetheless for completeness. So we've now got this as well. Now I am going to change this up slightly. Okay. Well, we'll just call it V2. It's sort of the other way round to live, but it's fine. Okay. Now we want, excuse me. Perfect. Okay. Now, we also have this small one in here, which I think is equally important. So just going to mark that up as well. Will help formulate the trade idea if there is one. And finally, we'll just leave that as that for now. Okay. So, game plan. My first game plan. So if we see this unconfirmed high time frame SMT hold and the market begins to support the idea of lower prices, so that's one. So that's from this key price level here, from the the SIBI or bearish fair value gap, this key price level. If we see that rejection, then we could see a trade here, but would need to monitor the BISIs to make sure that no support is happening from there. So if we see unconfirmed hold, price being above the true week open, and the market begins to support the idea of lower prices, so that's one. Two, just dropping out to the daily. Yeah, I'll just drop that down to 4 hour. That would be my only model seeing lower prices. If we're going to see higher prices, then I have no idea why. By the way, let me just do these. Okay, so yeah, not. Let's go out here. Very weird. All of a sudden, it's got blue lines in between them and stuff like that. It's just weird. So yeah, if we were going to continue higher, Um, continuing higher for me, again, it's a tough one because is the market going to retrace all the way down to here? I mean, my primary one would be that if we see the market, well, no, because if we see the market trade lower from here, then in theory it's supporting my idea at the highs. So if the market's going to continue higher, if the market's going to continue higher, I mean, we've seen support from the 4-hour bullish fair value gap. So if the market's going to continue higher, then I would like to see a low time frame correlation at an H1 imbalance supporting the idea of higher prices, where we're then looking to target certain highs. Okay, so there's sort of two. There may be another one, but as currently as it is, from above, high time frame, maybe that will form after 10. And then I guess there's a higher time frame. If this fair value, if this candle closes bullish and forms this fair value gap, then this would be an area that I would consider. I'm going to put a horizontal line here just as a reference point. Yeah, I'm going to leave that there pending this closes bullish. If that's the case, if the H4 candle closes bullish and the market forms a high time frame cracking correlation at the H4 imbalance to then see higher prices, they would be the models that I'd be looking at. Okay, so with that being said, we're now going to drop down to the 15. Oh yeah, okay. So first thing we want is the it's 10 o'clock. Oh my goodness, why? No idea why that is automatically. Okay, so let's have a look at some of the things that we've got this huge bearish candle for the potential M15. Yeah, huge candle. Okay, let's see. Actually, I just want to mark up 8:30 news embargo. Ooh, sugars. Accidentally flick that like you wouldn't believe. You know what that? What's that blue line in there? What is? Oh. It's like. Oh my god. It's not that, but it's like everything has. What's this? Yeah, which is fine. But why the hell am I getting midpoints on bloody everything? Which is ever since I added well, okay, bit of coffee. Well, let's continue. So right now, despite we've just entered now our trade execution window, I want to. The 4-hour candle still hasn't completed yet. So let's see. Let me slow this down a tad more. Let's go to equities open. Certainly, this is just. This is baffling me. Sorry, but it just is. Like, how has it got a midline? Sorry, not that. Confused. But anyway. Okay. So we've just had equities open. I do want to venture out to the 4-hour. because it's looking extremely probable despite that we still have this, but extremely small fair value gap there. But let's see what occurs. I'm not convinced by anything yet, so actually I just want to check the hourly. Okay, because that price level is extremely yeah. I'm not convinced yet about lower prices despite the high time frame cracking correlation. I be honest, I'm not convinced. So sorry, I just want to go back out to okay. So let's continue to the news. Oh, okay, that's extremely interesting. Go out to the 4 hour. So we've blown through. There is no Sibi here. It's not one there. That sort of did form one. Almost a very small one. Remove that. I want to remove this as well. Drop down to the hourly. So we've traded through here. This is now looking rather bearish. Now, the problem with any trade here is where do you yes, you can use CE, for instance, if weird, for example, put that there, and you'd have to sort of, if you looked at that 61, so what's that, 30.5, so you're looking at somewhere in the region, which you can still frame. Certainly would have been viable. Just going out to the 4 hour. I want to see the 4 hour inflection point. There's one here. There is this inflection point here, which would need to be extremely careful of. Do think the market is going to extend. It probably doesn't matter. Okay, and let's not forget about YM. Okay. So with where we are, we have this huge certainly looks as though the previous day's low is the draw. I think if the market was to trade back into here without purging or trading to any of the H4 inflection points, previous daily low, this liquidity pool, which let's get rid of that. There we go. If we get rid of some of that, it does set the stage, still within our primary model, seeing lower prices. I'm going to want to see another candle. So it's traded, let's just have a look at the H4. Yeah, I'm staying with bearishness, and two are being here. However, this inflection point here, or the London lows, which haven't been traded to yet, I would say are extremely key. So I'm not so worried about. We can get rid of this. That one can stay. Let's just check the hourly very quickly. Yeah, so we're just overlapping a few confluences here now. Theory, if we are to be bearish, then the market should not trade back through there. We do actually have another one here as well, to be fair. Which is that? There. Which probably is the key one. Now we don't have that on. And in actual fact, it does mean could probably drop that slightly. Somewhere there. Which then brings this up a little bit more. So I'm interested in going short. I'm interested in going short, but let's just see what time we're at. It is getting late into the day and sort of getting outside of monitors want to turn off, and the market has moved quite a way, but it has retraced. So, you know, I am going to place that short. Let's just make sure we've got that. We do. Yeah. Sell limit. Save and journal. Just going to move this to the other side. Want to take a pick. Let's have a look. Yes. Okay. So yeah, we're going to engage the market with that. Let's have a look to see if we get tagged in now. This level here would be an invalidation level, but also if NQ was to hit, sorry, yeah, so this level here on ES, but also the top of this BISI fair value gap, whichever, on NQ would also warrant that. Let's see where we're at. Wow. So we didn't get tagged in. Look at that. And we've now gone to the lunch hour, so not going to bother. We've now got to the lunch hour. Yes, and look where NQ is. It's inside of there as well. So we can close that, cancel that order, which is a shame. We would have been definitely at break even. But look how close it came. I mean, we're talking millimeters here. And let's see if we get down to take profit. So certainly NQ is likely to purge its previous day's low. We are getting to PM session. Like to see another move lower if possible, especially on NQ. There we go. There it goes. And there you go. So NQ has purged its previous day's low. So interested to see if 4220. Let's see if we get below 4220 on ES. What time is it? Yeah, we've got probably 2 more candles. There you go. Look at that. So absolutely just missed out on the trade. It's just one of those things. It's absolutely one of those things. Not a lot you can do about it. It happens. It happens all the time. Perfectly executed. We had a high time frame model, which was game plan 1. Once we traded below this level here, I wanted to engage. We missed out by, let's have a look, 74 by 0.5. We missed out. Market continued lower. Now, admittedly, we could have argued that we missed the trade there. That's here is where we should have got in. Once we had traded through just there, which we did on on this candle here, by which time NQ gone. NQ had already validated it. So this candle here, we tagged in on this candle because, as we can see, the high of this one is 75.25, so we would have been in. So unfortunately, we just missed out on that one. That would have been a lovely, lovely trade. So goes to show that once we, and I mean we are talking about fractions here. Once that candle had closed, I wanted to see it come back. It almost did. Came back into the breaker, Came back into the breaker. But wanted to see that tag move lower. Missed out. It's one of those things. Fortunately, sometimes as well as that, when you're with FX replay, it's a little bit more difficult to stop the time and stuff. But it's neither here or there. Missed out slightly on that. That's a shame. But nonetheless, good, honest identification of high probability trade setup. Very unfortunate. No tag. Would have been a nice, lovely winning trade that we could have held. In terms of management, would have been looking here. As soon as the market had closed below this level here, there, we're at break even. Then we are essentially monitoring. I mean, that's gone quite low. The rules would have been set. We wait for 2R. Price trades back up. Comes up into here. To worry, as soon as it trades down, we see this close below here. Fair value gap. And there. Candles did overshoot. But at this point here, I'm looking at NQ to trade below there. NQ trades below. What time was this? Yeah, perfect. You're taking your trade, and would have been a beautiful trade, which would have started in the AM session and finished in the PM. So unfortunate, but again, I hope you guys took something away from that. I hope you witnessed how I identified high probability setup, how I set my game plan, and then I executed against my game plan eventually. I was slightly bit late, and I think in hindsight it should have been maybe a trade that I managed to get involved in. But nonetheless, you saw that go to profitability for a Friday as well. Low hanging fruit objectives. Stop loss was positioned at CE of that range. If anyone is wondering why did I pick that level, also I picked that level because I knew that the high of the stop loss was above both the balanced price ranges, whereby if we are bearish, price should not go back up to those levels. So yeah, hopefully in this one you took some things away. I think it was a really good session. Unfortunate, these things happen. We move on to the next one, but overall really happy in terms of the analysis, happy in terms of how we broke down what we wanted to see to confirm movement in a certain direction, how we had mentioned institutional order flow being bearish relative to the daily time frame, how we saw it as bullish relative to the H4 time frame. However, because of the high time frame cracking correlation at a key sensitive level, how that this could well be the move that initiates price to go lower and target the lows that we ultimately are set below the true week open and so forth. So hopefully you found this one useful. Thought it was a really good session, and on that note I'm going to leave it here, and I will catch you guys in the next one.